Hey everybody, it's Scott with the Davis team here for another Wow Wednesday, Words of Wisdom Wednesday. Today we're going to get into a little industry jargon. I know a lot of us try and stay away from using the acronyms that only we know here in the business what's going on. But sometimes we slip, and sometimes we're talking to realtors, talking to clients. We use things like DTI or LTV, which are synonymous everyone with this business, and everyone knows what they are unless you're talking to a first-time home buyer or even folks that have bought 10 homes. They know what they know while they're buying the home, but when they restart this process, they have to relearn it. It's like a foreign language. So I'm gonna go over some of the hot ones that we use a lot. And again, we try not to use them, but every once in a while it's good that everyone knows what these things mean and kind of their importance. So we're gonna start off with a big one, DTI. What is your DTI? It is your debt to income, and it's exactly that. What we count against you, and it's a gross number. We won't get into the real details of how to qualify, but if you have any questions on that, please reach out to me directly, and I can help do that with a lunch and learn, quick call, or whatever you need. Debt to income is again how much you have coming in versus going out. There's always certain things that we count. The next one is important is LTV, that is loan to value, and there's different types of loan to value. There is a CLTV, which is your combined loan to value. If you have two loans, loan to value is how much you're putting down. So 95% loan to value or LTV, 90% means you're putting 10% down, 95% means obviously putting 5% down. Pretty self-explanatory. Some of the other things that we get into are HOA, homeowners association. So a lot of folks that are first-time home buyers that didn't grow up in a HOA aren't familiar with that term. Homeowners association, HOA. HOI is another one. That's just your homeowner's insurance, and it gets mixed up with hazard insurance, homeowner's insurance, HOI. They're all the same thing. They all mean the same thing, and it also gets tied up with title insurance and mortgage insurance as well. But very different aspects of those three types of insurance. PMI is a good segue into PMI, which is private mortgage insurance, not to be confused with the upfront mortgage insurance with FHA. PMI is a monthly mortgage insurance that you pay. There's ways around that. If you're putting less than 20% down, you don't always have to have private mortgage insurance or MI mortgage insurance, that payment at all. So give me a call if you have any questions on how to get out of that and put less than 20% down. Tons of programs, and the rates are still fantastic for that. A great one that we've come across the past year and a half is PIW. Can I get a PIW? Can I get a PIW? A PIW is a property inspection waiver. It just means that we don't have to do an appraisal on the property. Everybody wants that. The issue with getting a PIW or an inspection waiver up front is that there's always potential that we'll lose it somewhere in the process. It's only happened a couple of times in the past year and a half or so, but if it does happen, we have to get an appraisal. There's no way around that. So it's something to stay on top of and be very cognizant of. POA is one that comes up every once in a while. Power of attorney. Very, very specific language has to be in a POA or power of attorney. Give me a call if you have any questions on that, or if you have clients that are using a POA, make sure they talk to their lender up front and get that approved prior to anybody leaving town. Worst thing you can do is have a power of attorney, but it's not specific, it's not correct, and one of the parties is already out of town. So address that up front, make that one of your questions you ask during the process. LOX, LOE they're the same thing, letter of explanation, LOX, LOE, and it just could be an address that came up on a credit report or anything in the process. It's just a couple of sentences, never be too detailed, very high level, a couple of sentences. I did not live at this address. This is my mom and dad's address, and that's it. That's kind of the things we need for LOEs and LOXs. PITI, that kind of ties into your monthly mortgage payment. It's your principal, your interest, your taxes, and your insurance. We don't escrow for any kind of condo dues or HOA. As we know, that's homeowners association. So the most important thing on going into the DTI is your principal, your interest, your taxes, and insurance. For those veterans out there, COE is very important, and that's your certificate of eligibility. We use that to get your approval through the VA. You only need to worry about that if you're a veteran in any of the services and you're doing a VA loan. One that's come up a lot with all the equity that we've seen in the past couple of years is Heloc, home equity line of credit, and that's just a second mortgage on your on your property. So you'll have two. The Heloc will always be in second to your main loan. And again, anything you need on that, please give me a call and I can set you up with someone that can do a great job in the Heloc for you. Two more left. My personal favorite, the FU. And that is not what you just thought. It was actually follow-up. I write notes to my team all the time. I get a chuckle to myself because I am a 15-year-old boy in my brain. Follow-up. FU is we're just following up with what we need. We try not to use that with clients, but it is kind of funny. And the most important one to everybody involved is the CTC. Everyone knows what this one is, except the borrowers, but realtors be very familiar with this one. We are clear to close. And that's what everybody wants to hear, everybody wants to see. And with that last acronym, we are clear to close this video. Have a great Wednesday, and I'll talk to you guys next Wednesday. If you need anything, please give me a call, 703-209-3138. Thanks, guys.